doing well. Karthik sir here. Today we are going to do the revision of a very important chapter in auditing, and that is chapter number 3, that is risk assessment and internal control. This chapter, in my opinion, is the core of auditing. So this chapter you have to do very, very well. This chapter, chapter number 4, chapter number 7, are very, very important for the CA final preparation also. So in CA Inter itself, you have to ensure that these concepts are very, very correct and it is proper, so that in CA final you can score excellent marks also. Okay. Now let's do this. Let's go from the beginning. Let's start the revision part. Now, the first area, that is your understanding of the entity and its environment. So, how do you understand the entity and its environment? I think all my students will know this answer because this is their favorite answer called REOFINS. Okay, so applicable financial reporting framework, regulatory industry factors, objectives and strategies, financial performance, nature of the entity, selection application of accounting policies. Correct. So let's do it point by point so that it is easy for you to remember. Please let's do it. In your regulatory industry factor, we had seen something called as TREC. So TREC was in relation to technological development, regulation, energy supply and cost, competitive environment, cyclical or seasonal activity, and finally customer supplier relationships. And we are mainly checking the contracts. Correct. Remember the chart BD1A chart. Okay. Then after that, we have done the next area, that is your O, that is called objectives and strategies. In that, after explaining this area, we had done a small hand action, that is basically this, that is called business expansion, industry development, and new product. So business expansion, industry development, and new product. Okay, very simple hand action. Then after that, we had done something called as financial performance. So that is this point here. Then in financial performance, we did something called as KBC finance. So if you remember, key performance indicators, budgets, forecast, credit rating agency reports, and finally financial performance analysis. Okay. Then we did N, nature of the entity. In that, we did a code called SUTIN, structure and the way it is financed, operations, ownership, types of investments. And in this also we have done the examples, that is nothing but first the money will come, so financing and financing activities, then that money will be used for business operations, then we'll make our financial reports, and in that there will be an item called investments. So this is how we just ensure that the remembering part is done. Okay, and all these areas we had done the explanation in the class in depth. Now let's go further. Let's go to the next area. Next is your selection and application of accounting policies. So this completes your entire code called REOFINS. In my opinion, a very, very important answer. Okay, let's go further. Then we had done this important part, that is understanding of the entity is a continuous process. If you remember, we had that amazing story of rat and pole. Remember rat and pole story? Let's go for it. First is the risk of material misstatement. Second is materiality. Third is you climb, that is your accounting policies. Then after that you have the brother, that is related party transaction, and having a romantic walk with his wife, that is sufficient appropriate audit evidence. Remember Sai. Then finally the sister says thank you Anna. Anna is what? Analytical procedures. Correct. So that is how we completed this part. Okay, if you remember rat and ball story, you'll easily remember this answer. Okay, let's go further. We had done one more answer which is part of automate environment, but I'll just say it here. We had done an answer called as how to understand the automate environment. That was nothing but 3 plus 3 plus 3, if you remember. That is information system purpose, version, location, architecture, interface. In-house was this packaged, outsourced, key person, CIO, CISO, that is Chief Information Officer and Chief Information Security Officer. Okay, so this is the part that we had done. Now, after completing this, let's go further to the next part, and that is we are done in relation to we'll do this materiality part first. Okay, then I'll take you to the risk circle, control circuit part. Okay, let's do this materiality first. Now materiality, this is what we had done, and if you remember, we had done the performance materiality chart, which I think took in the class around 1.5 hours or close to 2 hours just to tease the performance materiality part. Correct. So performance materiality you should know very, very well because that is a very, very important concept in auditing, and if you understand that well, you will understand almost all of the auditing concepts are aligned with materiality. So you will get all the concepts, you will get one by one, you will get the understanding of that. Okay. Now let's see here, my dear student, let's see this, please here. Now materiality, the main concept in that is first is materiality and performance materiality concept clarity should be there. Next is you should do the reading of the materiality and audit risk answer. Now let's go further in the areas that can come as a separate question in the examination. Let's see this. Concept of materiality in the context of presentation of financial statements. Now, materiality, you will think from what angle? You will think materiality from the user's economic decisions perspective, surrounding understanding and users as a group. So, as an auditor, you don't cater to individual needs of the users. You cater to the users as a group. Next is then after that, the auditor makes judgment about the misstatements and gives the reporting accordingly. Okay. We did a very, very important answer called factors that affect the materiality benchmark. If you remember, we had done a code called WOFUNLI, that is volatility, ownership structure, financial statement elements, users attention, nature of the entity, life cycle, industry, and economic environment. So this is what we had done in relation to factors that affect the materiality benchmark. Next is what is the relevant data for chosen benchmark. So we had done this answer as well. Now relevant data for chosen benchmark was very easy. First is you look at the prior period, that is um, last year's data, or you look at the year beginning till today's date, that is called period to date. So prior period, period to date. Okay, then you will have the budgets and forecast, that is about the future. You will keep the significant changes in mind and you will apply it to the, you will percentage applied. Basically you will take a any important figure in the company's balance sheet or the profit and loss account and you will just simply apply a percentage. Okay, now that was this basically relevant data for chosen benchmark. Next we had done is factors due to which misstatements of lesser amounts can be material. Now misstatement of lesser amount can be material is a very true matter, because sometimes the value of the item can be less but it can still be material. So let's see at let's look at this part. Now understand this part properly. Let's see here, please here. Okay, it didn't come to this part. Misstatement or lesser amount can be material to influence the economic decisions of users when first law, regulation, or AFRF affects the user's expectation. And the second is disclosures. So if it is key disclosures required in the industry, like example, RBI can give key disclosures for banks, or IRDA can give key disclosures for insurance companies, correct? And you have separate disclosures, basically separate disclosure required in a given situation. Example, there is a fire in the factory. So separate disclosure is required. Then even if the amount is less, still that disclosure has to be given by the entity. Okay. Now this is basically the answer in relation to misstatements or lesser amounts can still be material. Okay. Let's go to the next answer in our main chart. And then the main chart you will see there on the right hand side in green we have written there revision in materiality. So when will you do revision in materiality? That is basically this answer. See, revision materiality as audit progresses. Revision can be done due to change in circumstances because of any new information that comes into the picture, or changes in understanding the entity and its environment. Okay. Also in revision you will see what is the actual issue and what you had expected, that is anticipated, and the difference between that can be only if the difference in that is big. In that case you will prefer revising the materiality benchmark. Okay, finally you will keep performance materiality in mind, and I think it is very clear that performance materiality can change. Remember, from 1 lakh we came down to 10,000, from 10,000 we came down to um, from 5 lakhs we came down to 1 lakh, from 1 lakh we came down to 10,000. So that performance materiality benchmark can also change. Okay, so performance materiality and the nature, extent, timing of further audit procedures. Further audit procedure, as you know very well, line comes down, that is basically SA 330, response to risk is there. Okay, that completes this part. Last area I told you it is not directly a part of materiality, but I included in this chart only so that you don't forget this answer, which is an important one. See, auditor's assumption about users, the one which is in black below here. See, auditor's assumption about users. Now, what all can the auditor assume about the users is given in this part. Okay, so let's do this properly. Let's see this one by one. So everyone, please, here we have done a code called Mr. Kumjid, if you remember. Remember Kumjid? So just a second. Here it is. Okay, let's see this. So auditor determination of materiality is a matter of professional judgment. And what all can the auditor assume about the user? So we had done Mr. Kumjit. Okay, knowledge of business and economic activities, we are assuming that the users will have, the shareholders will have. Understanding of the financial statements, they understand the financial statement and they understand the concept of materiality, that the auditor cannot check everything. And auditor does the audit on the basis of materiality. Next is the users understand that in financial statements when they are made, then measurement is done of some areas where it can be on the basis of estimates or judgments, and it can be just a guesswork process. Example, your reserves for doubtful debts amount, or your life of the asset amount, all these are just estimate that you're making, correct? Finally, in the end, you don't spoon feed the decision to the shareholders. When you give your audit report, the shareholders are supposed to read that, or the users are supposed to read that and take their own economic decisions. Okay, that is basically this Mr. Kumjid. Okay, that completes this part, auditor's assumption about users of the financial statements. Let's go to the next one. Let's see this. Now that completes for us the materiality part. So this entire chart very, very important. In the class also I had given you this chart, and this you should know properly. We had to use a lot of memorizing techniques for this also, and I hope this ave is now sealed in your mind. It should be properly covered. Okay, now let's go further. Let's go to our most important one, that is your risk circuit, control circuit. And I've put the basic numbering here so it is easy for you to understand. and then we'll do one by one. Okay, let's see this first. You have the company has an auditor. The auditor has to understand the company before he starts the audit work. So in that case, two things will come: understanding the entity and its environment, understanding the automated environment. Okay, and auditor has to, during the audit work, he has to understand the entity on a continuous basis also. Okay, so these three answers we had covered. If you remember, the first answer was the Uri of part. Second one is 3 plus 3 plus 3, and the third one is, if, as you remember, the rat and pole story. Okay, now after that we go to the next area, that is the auditor has to do something as called as a risk assessment process. Now in every company you have the management. Under the management you have the accounting department that is working. Now the accounting department has to ensure that the accounts are proper. If the accounts are not proper, it can lead to misstatements. So what are misstatements? How the entities records are required to be disclosed as per AFRF and how they have actually reported. The difference between these two is called misstatements. And if you remember, we had done something called as in the class APCD. APCD is nothing but amount, presentation, classification, disclosure. Whether how it is required to be done as per AFRF and how you have actually done, the difference between that is called as a misstatement. Now some examples of misstatement also they have given. If you remember, we had done a Jodi in the class. I'll just show the entire chart. 1 second, please wait. Okay, you just look at the top right corner, you'll see the misstatement, and you'll see there you have to see look at the difference between capital versus revenue, and vice versa. So basically, if an item is or a capital item is shown as revenue or a revenue item is shown as capital. Next is you have to look at the difference between FS and AFRS. So this is your first Jodi, which has 2 points. Next is any improper application of accounting policies or incorrect accounting estimates will come in this part. So these are the next 2 points. You will see that AP and AE basically. So your accounting policies and accounting estimates are these 2 points. 1 minute, just a second. Okay. So you have here, you can see your accounting policies and accounting estimates are the next 2 points. Okay. Next is regarding window dressing. Receivables, you will check. You will any receivables means your debtors if they are shown at an escalated manner. If they are shown in an escalated manner, it means that there is window dressing going on. And inventory can also be escalated so that the profit figure is shown at a higher value. Next is you have secret reserve here. Secret reserve is basically when you are showing fake, you can show fake expenses and you can pay lesser taxes to the government because you're showing lesser profits. Because if you show fake expenses, your profit will be lower. Okay. Inventory can also be given in that secret reserve point also. You can say if you overstate the inventory, it will be window dressing. If you understate the inventory, it will be secret reserve. Okay. Let's go further to the risk chart. Very, very important in my opinion. So risk chart, let's do it one by one and let's ensure that this is done. Please see here. Okay, let's go further. Now in risk chart in the class, I take you to the main chart and I think we have done it in step-by-step manner. Similarly, we are going to do now, please see here. First of all, audit risk. What is audit risk? Audit is the risk of giving an inappropriate audit opinion. Then you have audit risk is equal to risk of material misstatement into detection risk. What is risk of material misstatement? It is nothing but inherent risk into control risk. So your audit risk is nothing but audit risk is equal to inherent risk into control risk into detection risk. That is your audit risk. Comfortable? Now, after that, we had understood what is inherent risk, control risk. We had done the examples in the class. You can go through the examples that I had given you. So where we had done inherent risk, control risk, I must have made you write something there. So there you will get the matter. Let's go further. If the inherent risk is high or the control risk is high, or if both are high, then the RMM is high. If the RMM is high, you have to put more effort, and that's why the auditor should do more work and detect more areas. If the auditor detects more areas, the detection risk will be low, and that is the best way to do audit, where you are keeping the detection risk at a low level. Detection risk being low means the risk of not detecting something is low. It means you are checking more areas. It's a good thing. Now, detection risk. Now, in the new course, they have said here detection risk is made up of two things, that is sampling risk and non-sampling risk. Sampling risk is the risk that the auditor's opinion can be wrong because he's checking samples and not checking all the items. That is called sampling risk. Okay. And suppose if it is because of a human error basically means if the accounting department of the company gives us wrong data, that is called erroneous information, or if the auditor is not applying the right audit procedures, in that case you will understand that it is a human error. It is because of a person that mistake is happening. Either the management is giving you wrong data, so it is a management mistake, or if the auditor is applying the wrong audit procedures, then it is the auditor's mistake. And whenever there is human error involved, no, you cannot put the blame of doing the wrong audit or the audit opinion going wrong, you cannot put the blame on the samples. That is why when human errors happen, we call it as what? Non-sampling risk. We call it as non-sampling risk. Comfortable till here? Okay. Now, next one, let's see. At what level should RMM be identified in this? We had done FS level and the assertion level. Remember, FS level is pervasive and assertion level is concerned with TAD, transactions, account balance, and disclosures. Okay. Next area, for the purpose of identifying and assessing the RMM, what shall the auditor do? Auditor shall remember the action, identify the risk, then assess the risk. Now, identify the risk when you do that two levels. Identify the risk, FS level, assertion level. Then assess the risk. Assess the risk side by side. What will you do? That is this. That is your analytical procedures, observation, inquiry, inspection, and then you have finally the reoffense part. Okay. Then finally you have this. That is basically what can go wrong, and finally you have this multiple misstatements and material misstatements. Okay. Now that completes your risk chart area. Now let's go to the further area, that is whether a risk is a significant risk. In this we have done the relative anti-story, and for the crash course student we had not done the relative anti-story because the relative anti-story was connected to a another story called relative uncle story. Okay, so you or fraud uncle story. So you understand that because that fraud uncle story was not covered in the crash course batch because it is not required. It's a very simple concept. That is why relative anti story I might have not done, and that is why I had given you all a code, and that code was from core, if you remember. So whether a risk is a significant risk in that the will do with the code from core, and the people who are doing with the story will also remember the story also. And I'll say it side by side. First is a relative auntie, a police officer comes outside her house, so she's checking a fraud case. And after that, when you see her face, she's a relative of ours, distant relative of ours. Then after that, you tell the auntie, why are you standing outside? Please come inside. So outside the normal course of business. Then you have your face measurement changes. Remember that is measurement uncertainty. Then after that, the 500 rupee note. Remember complexity of the matters. And last but not the least, you will get the recent development. Uncle goes around and round inside the washing machine. Correct. So similarly, when we had done in the code format, now I'll just tell the code that is from core, fraud, related party transactions, outside normal course of business, measurement uncertainty, complexity, and finally you have recent developments. Okay, that is how the flow goes. Okay, so this is the same answer, that is whether risk is a significant risk. So this is just what we completed right now. Okay, now next is identifying the significant risk. Can you have to identify, and it is greater for non-routine matter, that is for M2 C2, if you remember, management intervention, manual intervention, controls not effective, and complex calculation. And finally it is greater for significant judgmental matters, and judgmental matters are of two areas. We'll see interpretation and assumptions. Okay, finally we have the last area called documenting the risk. Documenting the risk is this part. Okay, now this completes our risk circuit. Now let's go to the controls area. In controls we had done the meaning of controls. Tell me the meaning of controls. Very very simple than me. Controls, internal controls is a process that is designed, implemented, maintained by the TCLG management employees to obtain reasonable assurance about FOLA, financial reporting reliability, objectives, effectiveness and operations, effectiveness and efficiency, legal compliance, and asset safeguarding. Okay, same thing, purpose, same answer is there, called FOLA. Same thing, financial reporting reliability, operations effectiveness and efficiency, legal compliance, and asset safeguarding. Now next is what are the limitations of control. We had done hand action in the class, if you remember, so let's go for it quickly. First is internal control can only provide a reasonable assurance, lack of understanding, human judgment, management judgment, small entities, and finally we have the collusion part. Okay, last area we had this next part in this last area means in the first set, that is you have the components area. Components, if you remember, we had done a big different pattern, which I'll do immediately after covering this part. I'll go there and teach you that. And in this components part we had done in the class, there are 5 components of internal control, that is control environment, control activities, risk assessment, information and communication, and finally you have the monitoring part. Okay, next area. So now this components part also has more depth and answers that I'll take you through. Let me just complete this first, and in this part 1 of this chapter's revision video I'll complete that internal control components also. Hold on. Okay, let's go on to the next one. See this, factors which are relevant to decide whether a control is relevant. Remember this answer, very very important one. Okay, so what factors will you check to decide whether a control is relevant or not? And if you remember, we had done this area for this. Just a second, I'll just show you that. Okay, so we look at these points. First is what are the factors we look at? We look at the business, we look at the size, we look at the complexity of the system, complexity of the operations. We look at the internal controls, specific controls. Finally, we look at materiality, risk, and legal and regulatory matters or legal and regulatory requirements. So if you think of this answer, you have to think of this chart which you had made. Not chart, the placement of points was such that it was easier for you to remember. but you should be able to remember this. It's a very, very important one. Let's go further. Just a second. Just a second. Sometimes you lose the track of this. Okay, so just a second. Let's go for it. Okay, so you can see on the left hand side in blue, you'll see there factors which are relevant to decide whether a control is relevant or not. Just a second, please wait. Okay, so factors which are relevant to decide whether a control is relevant. We just saw the answer. Okay. Next one you will see here is understanding of the relevant controls. How will you understand the relevant controls? Evaluate the design of controls, tracing, transaction, observation, inquiry, inspection. Finally, you have operating effectiveness. Correct. Now after that, we have the next area that is in relation to what are the benefits of understanding. Very, very simple. Again from your BD1A chart. So in that case, we had seen, sir, we'll identify the potential misstatement, we'll identify the risk or material misstatement factors, and we will be able to design the nature, timing, and extent of further audit procedures. Okay, simple 3 points answer. Now after that, we have done this part, that is evaluation of internal control by the auditor. How will the auditor obtain the data or assimilate data in relation to internal control? So in that case, we had flown check, that is flow chart, narrative record, checklist, and questionnaire. Now in this, you will also see that in flow chart, narrative record, checklist, questionnaire, you have the some MCQ related questions can come, which is the most concise way of presenting something. That is flowchart, which is the graphical representation of the matter. That is again flowchart. You had another question which can be, which is the most widely used method to obtain information. That is your questionnaire. Okay, so you have to remember this in a proper manner and you have to read it carefully. Okay. Next is in relation to, sir, what are the benefits of evaluating intercontrol? In this, we have done the Sare Jahan Se Acha song. We have done this. Okay. So management is discharging its functions. Errors and frauds are to be located. Effective internal auditing. Adequate internal control system. Control is weak. Extent and depth of the examination, reports, records, and the certificates. Administrative control has a bearing on his work, his work. Sare jahan se acha. Then controls adequately, safeguards the assets, appropriate, audit technique and audit procedures, worthwhile suggestions, suggestions. That is how the song goes. Okay. After that, we have done the next area. That is after this. Then I told you to do the reading of 2 parts, which are very simple, which are just a second. That is these two. So you have to remember these two. That is formulate the audit program and after understanding internal control and testing internal controls. So these are the 2 areas that I told you to read. Okay, that completes a very important part for us called as very important called as risk assessment and internal control. In that we had done the risk circuit, control circuit. Okay. Now you go to the next answer, which I told you, that is components of internal control. As you know, we have the 5 components of internal control, and that is control environment, control activities, risk assessment, information system, and communication. And finally, you have monitoring of control. So these are the 5 areas that we did. Now let's do it one by one. What is control environment? Basically, control environment is nothing but the top management, how they run the organization. The auditor has to understand the control environment and see whether they have culture of honesty and ethical behavior, appropriate foundation for other components, if they are laying it properly or not. All these things we'll check. Now in this, when you do it, we had this chart which was here, and you need to understand the flow of this chart in a very nice manner. Okay, and I think you have this chart drawn in your book also and in your notebook, so ensure that this is revised with me properly. So let's go for it. Please here. Let's see this. First is control environment. First area is, sir, what is control environment? Let's go for it. Control environment is whenever the TCLOG and the management with their attitude, awareness, action set the tone of the organization. Correct. Second is what are the elements of control environment? So this is basically, sir, the TCLOG, we look at their rise. What is their rise? Sir, in rise we have the what kind of involvement does a TCLOG have in the entity? What kind of stature and experience they have in the organization. Does the TCLOG keep itself independent from the management or not? All these things, when we check, it is basically your control environments, TCLOG's work. So in this, we had done this Mukesh Ambani chart, if you remember. Okay, so this is the TCLOG part. So TCLOG has to do what? Rise. Correct. So raising difficult questions, independence, involved, stature, and experience. Okay. After that, we had done, sir, the management operating style. That was in relation to, so the management's operating style should cover 3 things. That is your business risk, accounting and processing, and finally financial reporting. Sir, for the management, 2 things are very, very important. That is integrity and ethical values. Also, the management should be competent. It is very important to that they should have authority and there should be proper segregation of authority and responsibility, and it should be properly aligned. Okay, with the HR policies and practices are very important in every organization to motivate the people who are working at the lower level, and this is also decided by the top management. And finally, organization structure becomes very important. Okay, before they are planning, operations, controlling, execution of the work, this becomes very important. Okay. Next area, sir. In order to assess the risk in relation to the control environment, what should the control environment do? What should the top management do for risk assessment? So for this, they have said here, they have to first identify the business risk. Identify the business risk. We have to look at the significance and the likelihood significance. I've given you here how much damage it can cause, and the likelihood is the frequency, how often it occurs. Okay. Then after that, we'll take actions to address the risk. We'll also do the risk assessment process and procedure, and finally, we'll apply the assessment procedure and see whether it is appropriate or not. Okay. If you have done this chart in the class with me, even at least once in the class, if you have paid attention, this area will be a cakewalk for you. It will be a very simple area. Okay. Now that completes this part. That is in relation to your control environment and risk assessment. So control environment is done, and this risk assessment part, this answer we just did. Okay. Now let's go to control activity. In control activities, we had done some examples of specific control activities. If you have not noted down the code, please note it down. It was a recently made code. So by chance, if you don't have, you can just copy it. Okay. We have a code called ASPIN. Okay. ASPIN is nothing but A is authorization, S is segregation of duties. Then after that, with P you have something called as physical controls, and with IN you have information processing. Okay. So now let's see this. I'll just show you where that area is. So because it's a recently made code, it is possible that you may not have written it. See, ASPIN. So you have authorization, segregation of duties, physical controls. Correct. You also have performance reviews, and finally you have information processing. These are the examples of specific control activities. Remember regarding this part, ASPIN. Okay. That is basically this code is written here. You can check ASPIN. Okay. Now in this we had done one more area. I'll just take you there. Just a second. Okay. Next is control activities is we have to check to assess the risk of misstatement. Assertion of transaction account balance disclosures which auditor finds relevant. The auditor should check those controls mainly. Policies and procedures are set by the management, so auditor should check that. And finally, activities of IT or manual system, whether that work is being done, that control is being done using IT or manual system, that is what the auditor should check. Okay. Let's go to the next one, that is your information and control communication system. Now in this case we had done, sir, in auditing, auditor is concerned with the financial aspect of the company. So auditor should check what? Auditor should check the transaction, journal entries. Then in the ledger, in ledger you will check the initiating, recording, processing, correcting of transaction. Then after that you will have information system that captures the events, and finally financial reporting you will check. Simple. This is how it flows. After that, we had one more answer, that is, sir, the auditor should, one more answer, it was a continuation of this answer only, but it can come as a separate MCQ question. So please see here. That is basically this part. Auditor should obtain understanding of information system, how the entity communicates, roles and responsibilities. It can be through manuals or by email or orally or management's actions. So this is the way the controls will be, the auditor will ensure that will obtain understanding of the information system which is there in place. Okay. Let's go to the next area. That is this. See, major activities in relation to the monitoring aspect of it. So whenever the auditor monitors any internal control, so how or the management of the company monitors the internal control, what will the auditor check regarding the management's work? So auditor will see the definition of monitoring, which you know very well. It is a process to assess the internal control. So monitoring of internal control basically means the process to assess the effectiveness of the internal control over time. That is called as the definition of monitoring. Now, sometimes you do monitoring yourself only. That is called internal monitoring. That is during your ongoing activity when the work is going on, or after the work is done. That is called separate evaluation. Or you can come to know about some issues in your system by some outside party. That is called external monitoring. You have your customer complaints from regulator. All these things come in this part. And last point is assessing on a timely basis and taking what a remedial action. See, just by monitoring and knowing the issues in your system doesn't help. You have to work on it and take remedial action. Hi everyone, let's start with the next part of chapter number 3, that is called as automate environment and test of controls. We'll do these two parts here and we'll ensure that this part is done in a proper manner. Let's see this. First is what is an automate environment. Automate environment basically refers to a business environment where the processes, operations, decision making and accounting is carried out by the help of computer systems. Computer systems are also known as IT, that is information technology, or IS, or that is information systems. Okay. Next is what are the key features of an automated environment? Very simple answer. It has a long code, but the code is very easy to remember. So it is Philippe is less prone to human errors as he gets latest information using connectivity. Let's go for it again. Philippe is less prone to human errors as he gets latest information using what? Connectivity. Okay, so now how does that work? You must should know it. That is, F is using computers. What are the key features of automated environment? Basically means what are the key important features of computer. Computers are faster, more accurate, large volume of transaction can be processed in an easier manner. Integration between business operations can easily be done. Your purchase, production, storage, marketing and sales, customer relationship, or recovering the money from the customer, all these things can be done easily with the help of computers. Okay, the data can at least be assimilated easily. Next is better security and controls are available in the automated environment. Then less prone to human errors is the entire point. Then latest information you can get in today's times, but for that you need to have connectivity and networking capability. That is nothing but your use of internet should be there. Okay. Let's go further. Let's see this. That is understanding and documenting the automated environment. This we had seen in part one also. In that we had done something called as 3 plus 3 plus 3, if you remember. In this answer is there. So let's go for it. First is information system purpose, version. Then you have location, architecture, interface, in-house versus package, outsource, key persons, CIO, CISO. Okay, that is Chief Information Officer, Chief Information Security Officer. Okay. Let's go further. Next area is in relation to the various IT risks that can be there. Very simple. Let's go in R flow. First is there can be loss of data, unauthorized access to the data, direct changes to the backend data or the data in the master file, unauthorized changes to the systems and programs, inaccurate data, inaccurate processing of data. Then you have the authorized person finding it difficult or failing to make the changes in the system or programs. Next point is lack of segregation of duties. And finally, excess access or privileged access, that is called IT person gaining access. These were the points that you have in your IT risk answer. If you remove your notes, you will be able to see that numbering which is there properly, and you can easily get the flow in one go. Okay, simple answer, very nice answer, highly scoring answer. If this question comes, you should get full marks in this. Okay, very, very comfortable answer. Let's go further. Now that is basically this area. So I had taught you before, this was for the teaching part, but I had taken you to this answer then. Impact of IT related risk. What are the various impact? There can be impact on the controls, there can be impact on the substantive checking, and there can be impact on the reporting. Okay. Now impact on controls is what if there are IT risk is there in a system and you're taking the data from that system. So you will not be able to rely on the controls. So first is there is non-reliance on your automated controls, calculations, accounting procedures. You are not able to rely on it because the system has a lot of issues. The system has IT risk. It is virus infected, or some person has manipulated the data. Now, if that is the case, then you will not be able to trust the controls. Okay, and therefore it may lead to additional audit work because you will understand your substantive procedures will increase because the controls are not that good. So I told you many times in the class, if the controls are weak, then your substantive procedures will increase in order to reach the RA level. Next is substantive checking. Let's do this. That is non-reliance of data obtained from the systems. In such a case, all information, data, reports would have to be tested thoroughly for their completeness and accuracy. And hence this increases the substantive checking work that is called detailed checking will increase. So when the line goes up, you have to do more work to get the evidence. So that is your detailed checking will have to be done so that you are able to gather more information. Let's go to the go to the next part. Impact on reporting. Now, whenever the data is not proper and IT-related risks are there, the more chances of misstatements increases. So, chance of misstatements, will increase to multiple levels, and that is why they have said the auditor will give a modification. Will be there in the auditor's report. Auditor will give a modified opinion. So, modification of auditor's report will happen in some instances. That is where the misstatements are material in nature. Okay, that is the impact of IT-related risk. Let's go to the next area. That is, we are now doing this three types of controls in an automated environment. That is basically this. That is general IT controls, application controls, and IT dependent manual controls. Okay. General IT controls I told in the class are pervasive in nature. They spread across the organization, right from the lowest level person till the highest level person has to follow the general IT controls. Okay. These are also called as indirect control. Remember these for MCQs. Application controls are nothing but automated controls. They mainly deal with input, process, and output. Okay. What are IT dependent manual controls? When the controls are done by humans only, but with the support of computers. Okay, that is called IT dependent manual controls. In this, I had given you the example of the bank account freezing example. I told you that during COVID time, I was not using a specific bank account, and the bank froze that account because it was not getting used. So I had to go to the bank and fill the KYC form to ensure that the bank account is unfrozen. Correct. So that example, when I give you in the class, that is nothing but your IT dependent manual controls. Simple. Let's go further. Now here they are given the in relation to, I'll take you to the main answer, that is basically this. Now in this we had done, sir, the activities that are there in general IT control. So in general IT control, what all activities are there in place? So in general IT control, the first activity that in my flow was your acquisition, development and maintenance. That is number one. The second activity we did was this area that is called data center and networking. The third activity we did was access security, and the fourth one was program change. Okay. So let's do this one by one. Acquisition, development, and maintenance. I told you that, sir, whenever we are acquiring any system, we have to ensure that for overall management there is a person. Sir, project initiation is done by the IT expert, and he will do the analysis and he will give the design of the system that he wants to create. After you give the approval, he will go and construct the software, and finally the software will be there in place, and we have to do the testing and the quality assurance work. Okay, and we have to ensure that the testing and quality assurance is done, so that only after that the software is can be implemented. Next is whenever a new software is there in place, data center, whether data is stored, and networking, that is how the data is communicated, this should be there in place. Again, for that, we'll have a person who will handle the overall management. Data will be processed in batches. We should take the required backup because data can be lost also, so we should have the backup. Next is we should check the performance monitoring on regular basis, and performance monitoring, if we come to know that if the performance is weak, then and if there is a chance of data getting lost, we should see whether recovery procedures are there in place in terms of BCP, DRP. BC is business continuity planning, DRP disaster recovery planning. Okay. Next is access security. Access security means what? Which data who can access. Now for that there should be a policy in place. We should implement that policy on ground, that is called as organization and management. Finally, we have something called as PONDA. What is PONDA? Very simple. Physical security, operating system security, network security, data security, and application security. So this is what we had seen. Okay. Last but not the least, program change is nothing but if change is to be made in an already coded program, it is called a program change. Basically, if the software is already running, but if you need to update the software, that is called program change. Now, program change, we had done the mobile app story, if you remember. And mobile app story, you have to remember like this, that first of all, you need someone to take up the charge and ensure that the changes are done. Okay, that is called change management process. Then after that, that person should request the change from the customers. Customers, when they say that these are the changes that they require, after that we should get the changes made. So that is called requesting the changes and then making the changes. After the changes are made, you should ensure that the testing is done properly, and only after that you will, uh, you know. Um, Make it live. Make it live means ensure that everybody is using that updated application. Okay, that is in relation to your program change area. So these are the four areas in relation to general IT controls. Anything can come in the examination. Okay, so this first point is here, second point is here, third point is here, fourth point there. You should ensure that this is done properly. Now in this, I just want to show you all something, and that is this object is also very, very important in the exam. No, they can give this sentence and tell this objective is for which general IT controls, and you should understand, read and take the example that I had given in the class, and remember whether it is your data center and network operation, whether it is program change, whether it is access security, whether it is application system development and maintenance, which of the parts is coming here. That is what you should check. Okay, let's go further. Let's go to the next area, that is in relation to, let's see this. Okay, now, testing methods in automated environment, very, very simple. That is, reperformance is the most effective type of testing. You and I both know. However, reperformance is very, very time consuming and it is not efficient. Because of that, the most efficient method of testing in today's times is inquiry and inspection. However, when you are using IT, the more common methods are, first is walkthrough, checking a transaction from one end to the other end. Next is different scenarios. You create different situations so that you are able to check the functioning of the application at different levels, or at different accessing ability. Basically, how much it can process at once. You're checking that. That's got different scenarios. And finally, you are checking the configuring. Configuring is basically the programming part of it. So you're checking the codes and checking whether the application is working properly or not. Okay. Next, after that, we had done the next area, that is in relation to, if you see this part, manual elements. versus automated elements in entities internal control. In which cases are manual better, in which cases automated is better. In that we had done this. Okay, if the transaction is having more recurring transaction is there, then you will understand that application your computerized controls or automated controls are better. But if it is non-recurring in nature, you will understand that in that case manual controls are better. If errors are very difficult to define, anticipate or predict, then manual is better. But if the errors are, see, errors can easily be anticipated or predicted, then manual system is not that good. Then automated controls can give you better result. Now after that you have, if changing circumstances keeps on happening at a continuous basis, then manual controls are better. But if you understand that if there are any only specific ways of doing the things, then in that case automated controls are better. Finally, in monitoring the effectiveness of automated controls, manual controls are very important. Machine cannot by itself start running. You have to ensure that you are giving the proper instructions to the system. Okay, that is why they have given the last point here. Okay, mark this as important. Very nice area. Let's go to the next area, that is this audit approach in an automated environment. We have done this using this chart here, and we'll use this only. Very simple. First is, so the auditor will keep in mind the accounting plus disclosures which are there in place. Auditor will keep in mind the risk, that is quantitative plus the qualitative risk that is there. Auditor will keep in mind the assertions. Assertion means what is it affecting? Is it affecting the transaction, account, and disclosures? In that also what assertion it is affecting. In transaction, you know very well, occurrence, completeness, cutoff, classification, accuracy, like that. What assertion it is affecting. Next is you will look at the source of misstatement, and finally you will see whether the risk is coming from IT system or not. That is called IT system risk. Okay, this is called risk assessment. This is basically this point. See, risk assessment is basically this point. Just a second. This point. Okay. Let's go further. Now we are doing understand and evaluate. Let's see the understand and evaluating is this. So you will understand the business process. You will look at the risk and control matrices. Because you're checking controls, you should check the design of controls also, and you should check whether controls are applied to the entire entity. That is, whether it is spread across. Finally, you will check the IT general control or general IT controls, and you will check the application controls also. Okay, that completes the second one. If you can see here, that is understand and evaluate. This one. Next is test for operating effectiveness. Let's do this area. Now in this, you will look at you will do the control testing. You will look at the source data because that is very important to check. You will check the various reports that the organization is generating. You will of course do the testing on sample basis only because it is not possible to check all transactions. And finally, you will check this control is coming from whether the people who are setting the controls, whether they are competent and independent or not. That is what you're checking in this case. Next, last point is in relation to reporting. So in that you will check. So I'll just show you this area so that you know don't get confused. Reporting this part. So let's see this reporting part. You will check the deficiencies. You will check the significant deficiencies. You will see any remediation is taken by the management or not. You will look at the internal controls memo and the management letter. And finally, you will, if required, you will give your opinion in the auditor's report. That is how the flow goes. Okay. Let's go to the next area. Let's see this. Now, what are the data analytics for audit can be used for which purposes? So basically, to checking the completeness of the population in relation to checking the samples, it becomes very important. For reperforming calculations, it is a very important matter again. For recomputing the balances after the ledger is made, and when you're doing when you find the balance of the ledger at the end of the year, to recompute the balances to see whether the balances are computed properly or not. That is what you're checking in this case. Next is you will check the journal entries because they are the heart of any transaction, any core of any accounting entry. You will see whether any fraud investigation is required or not, or in that case you can use data analytics. And finally, you will, if some issue is there in the organization, then you will see which controls are bad. That is, you will check the control deficiencies. That is basically this part here. Okay, that data analytics for audit. Let's go further. Digital audit, this I asked you all to read. It can come as a short note in the examination. Very simple answer. You can go through it. After that, we had done internal financial control as per the regulatory requirements. In that, again, we did something called as FOLA fraud, if you remember. So FOLA fraud flows in this manner. Let's do it. First is financial reporting, reliability, operations, effectiveness, and efficiency, laws and regulations compliance or legal compliance, asset safeguarding, and finally, you have frauds, prevention and detection. Okay, so if internal financial controls are there in place, even as per law, if it is there in place, it's a good thing because all these things can be taken care of. Okay, let's go further. Next, we had assess and report audit findings. So auditor will report what matters in his audit report. Again, a read answer only, but I'll just read it through here so that it doesn't get missed. Auditor will check whether any weakness in the internal IT controls are there or not. Auditor will check the impact of these weakness. So very, very simple point. First is weakness, second is impact of the weakness. Auditor will check the report, auditor will report deficiencies to the management, that is the internal control memo or the management letter the auditor can go through carefully. Auditor can then communicate in writing any significant deficiencies to TCWG if it is required to be reported to that higher level of management or not. So those charge of governance, as I told you, those who sit above the management will communicate to them in writing if the matter is a significant matter. Significant matters. Remember, significant matter. Okay. Let's go further. Now we enter the test of controls area. In that, there are few areas that you have to simply read and understand. And regarding this, we have done a lot of examples. Remember, line comes down, line goes up. We have done many times. Okay. That is auditor responses to assess risk. That is SA 330. So that is basically SA 330 states that, and then given your auditor shall design and implement overall responses to address the assess risk commitment statement at the financial statement level. And auditor will also design and perform the further audit procedures, but this time at the assertion level. Same thing. So at the finance level, at the assertion level, the auditor has to design the responses. Auditor has to design the responses. Okay. That is basically what they have said. Let's go further. Now, in designing the further audit procedure, the auditor has to keep these in mind. What are the chances, likelihood of the material misstatement? Risk assessment takes into account the relevant controls, that is, whether controls are thought about or not, whether there are any errors in the control or not. If the controls are weak, remember the control risk increases. See, control risk will increase in that case. Okay. Now, based on this, the auditor will determine the nature, timing, and extent of his substantive procedures. Last point we have, that is called more persuasive audit evidence. The higher the auditor's assessment of the risk will be there. More persuasive audit evidence means the auditor is checking more deeply, or he want more satisfaction from checking or doing the checking work. In that case, you will understand if higher risk is there. In that case, the auditor's persuasive audit evidence that the auditor will need will be more, because he will need more satisfaction and more what you call evidence to remain calm. Okay, that's basically this area. Next, let's see this. This is your test of controls area starts now. So we have 1A, 1B, 2, and 3. 1A was in relation to the nature and extent of test of controls. So in that case, we'll first do the inquiry. Let's go for it. We'll first do the inquiry, wait for the management response, and we'll do the other procedures after the management gives the response. Auditor should check the controls, how they are applied, the consistency of the application of the controls, and by whom or by what means the controls are applied in place. This is 1A. 1B is nothing but your extent of test of control depends on which matters or which factors. We have FlexRow. FlexRow very simple. That is frequency, length of time, expected rate of deviation, relevance and reliability of audit evidence, and finally other controls you will check. Okay. Then after that we have 2. 2 is what? Retesting of controls. Retesting of controls. Now retesting of controls normally is done once in every 3 audits, but when should the auditor retest the controls more frequently? In which situations? Where the control environment, the risk assessment and monitoring of controls are not that effective. So if there is any change in the effectiveness of control environment, risk assessment and monitoring of controls, the auditor will prefer retesting the control. Whenever there is a change in the characteristics of control from manual to automated, automated to manual, the auditor will prefer retesting the controls. Whenever general IT controls are there in place, or if there is any changes in that, the auditor will ensure that he is retesting the controls. Whenever there is a change in the application of controls, the one person leaves the organization, the other person joins the organization. That is called change in the application of controls because of changes in personnel. That is what the auditor will, then the auditor will retest the controls and not wait for 3 years to get over. So auditor will retest the controls earlier. Next is risk of material misstatement in the previous year. If it is very, very high, then the auditor will prefer retesting the control before the next year's audit starts. And finally, that is COVID-19 example we have done in the class, that is lack of change to change in circumstances. So if the organization shows lack of change to change in circumstances, in that case the auditor will check less. Okay, so in that case it is a bad thing, because see, if the auditor, I think I misquoted that matter, I'll just repeat again. If there is a change in the environment, and because of that, if the organization has not shown flexibility and the organization has not changed, then that itself is a risk. And when that becomes a risk, then in that case, the auditor will be more worried. Okay, then the controls will be checked by the auditor in much more depth. However, if there is a change in the circumstances, and because of that, the organization also shows the required changes and shows flexibility, that will calm the auditor, and the auditor will say, okay, it's a good thing that the organization did. Uh, Because sometimes if COVID-19 is there, don't you think the organization's policy and procedures may change or the method of working will change? The answer is yes. The order is, will retest the controls in case there is a lack of change to change in circumstances, because major things have got changed in the organization. Okay. Let's go to the last one, that is specific inquiries on which matter. If there's a deviation in the controls, then auditor cannot rely on the controls, and the auditor will have to forcefully do additional test of control. Remember the access card reader and the timesheet example. This is exactly what I'm trying to tell you. So you will, if the access card reader machine is not working properly, you rely on the timesheet. And finally, the auditor will, if the if the auditor does additional test of controls, in that case, if he reaches the R level, or sorry, if he reaches desired level of confidence, or he gets the required evidence from the controls, if he's satisfied. If he still doesn't get it, then the auditor will come to know that, see, I checked the controls, I did not get any satisfaction. I did additional test of control, I still did not get any satisfaction. In that case, the auditor will know that his substantive procedures is going to increase because there is going to be a potential risk. Simple. So if additional test of controls are not working properly, auditor will know that there is a potential risk. Okay, that completes this area. Okay, that's it. You can go through this area. Chapter number 3, in my opinion, very important chapter, very important one. Ensure that you're doing it properly. I wish you all the best. Study well. Take care. See you. Bye bye.